Let's trade it with Scott Bauer, the CEO of Prosper Trading Academy. And I believe, Scott, just saw your trade. You're looking for just a big move, not really any particular direction.
You got it, Oliver. And this is known as what traders call it as a cheap shot. And it's a shot because
All right. Let me get my wallet out. Sounds good.
A little bit of a shot in the dark. However, I would never do this on a position where I had any sort of unlimited risk. Here, by buying next week's 15 call, and Kevin alluded to the fact that there's just a massive amount of buying on this week's 15 strike call. I'm buying next week's 15 call, also next week's 13 put. I am looking for that big move. I can do that for 25 cents. Now, that sounds really cheap, and it is, but typically Ford doesn't move, right? Even on earnings, Ford does not move that big. So that's why this is a cheap shot. Even though 25 cents seems really, inexpensive, I do need a move here, but I don't care either way.
Okay. So the 15 call, the 13 put, interesting. The payout then has a particular apex payoff here. Am I thinking about that right?
It's open-ended because I'm only long a call and a put. So let's say the stock went to zero, which is not going to happen, but that would be the max payoff on the put side. On the call side, the max payoff is, however high the stock goes, really.
Yeah.
I mean, quite frankly, on a position like this, you're not looking for a grand slam. You're not looking to win the lotto. I'd be looking to exit this somewhere 50, 60, maybe 70 cents on a really big move. But that's the risk I have. I also would do this because it's more of a shot beyond the normal probabilities that I would use. I would probably use half of my typical allocation that I normally would on a position like this. But again, I can do this because I know what my risk is. My risk is 25 cents no matter what happens.
Right. Okay, just the reason why I kind of got mixed up there, we got a little typo on there. You're buying both the strikes.
I am buying both.
Yeah, not selling. Yes. We had the selling of the put. No. You're buying them both because that's the outsized move. You're because, and it's interesting you call it cheap shot because usually these trades are expensive.
Well, so if you look at it from a volatility standpoint, even though it's 25 cents, it's very expensive. From a dollar standpoint, very, very cheap, and that's what I like about this one.
Okay, so Ford does have some recent, madness behind it, some pretty gappy events. Is that where this comes from, that it's just going to kind of stick with that recent habit of being a very swingy stock?
You know what, that and also, you and Kevin talked about it. There's so much news that they're probably going to mention around EVs, and anything that may spark, someone's interest or some of the algos out there interest could really make this stock move in one way or the other. So that's kind of what I'm looking for here. I don't necessarily expect it. Again, this is why it's a shot, not highly probable, but with a fantastic payoff if it happens with, again, limited risk.
All right. Hey, well, market's been ripping. Confidence for the consumer is high. Who's not ready to take a shot here? We got a little extra cash flow in this market. Thanks, Scott Bauer.
People are feeling good, Oliver.
That's right. Okay, Ford looking for some volatility in the report. Scott, CEO of Prosper Trading Academy. All right, buying a put and buying a call.